Ladies and gentlemen, welcome to the stage Director of the Atlantic Council's Global Business and Economics Program, Andrea Montanino. Saygıdeğer misafirlerimiz, Atlantik Konseyi Küresel Ticaret ve Ekonomi Programı Direktörü Sayın Andrea Montanino'yu sahneye davet ediyorum.
Hello everyone, welcome to this session. I'm Andrea Montanino, the Global Business and Economics Director at the Atlantic Council and Boyd and Gray Fellow on Global Growth and Finance. I'm really delighted for moderating this session. It's very timely because of the new Sovereign Wealth Fund in Turkey. And I'm particularly happy to welcome the Honorable Mehmet Simsek, the Deputy Prime Minister of the Republic of Turkey, who will deliver the keynote address. Mr. Simsek has a distinguished career, not just in the public service, but also in the private sector, having worked for several years at Merrill Lynch in London and UBS in New York. As a public servant, Mr. Simsek has led Turkey through the perilous waters of the global financial crisis, first as Minister of Economy, then as Minister of Finance, and now as Deputy Prime Minister. Mr. Simsek has set out an ambitious reform agenda for the coming years, including a broad tax reform, enhancing and deepening capital markets, advancing higher education and innovation, and taming Turkey's current account deficit. Following Mr. Simsek's remarks, we will have a panel with distinguished panelists, and we will look at sovereign wealth funds, how they work, how they are managed, and what can be their role for long-term economic growth. Mr. Simsek, please, the floor is yours.
Good afternoon. I'm delighted to be here. It's good to welcome Atlantic Council back in Turkey with a bit of a delay. Okay, we're supposed to be talking about sovereign wealth funds. But before actually I talked about the benefits of having sovereign wealth fund within the context of economic development, let me just give you my bottom line on the Turkish economy. Turkish economy has been extremely resilient in the face of multiple domestic and external shocks. If I was to give you just one piece of evidence, I would say post-global financial crisis between 2010 and 2016, average real annual GDP growth was 6.7%. During a time when we experienced, we had some fallout from Eurozone debt crisis. Initially, we had Arab Spring and then the chaos that replaced it. Many elections, intense terror attacks, a failed coup attempt. So, bottom line is there has been many domestic and external shocks. But fundamentals have been very strong, and exactly because of that, Turkey was able to deliver growth and deliver jobs. We've created 7.3 million net jobs, new jobs, since 2009. This is quite an achievement. Having said that, the unemployment rate is still high, but that reflects our extremely favorable demographics, rising working age population, labor participation rate, of course, is also rising, but the challenge is a good one. Now, in April this year, a major constitutional reform was approved by people, by Turkish people. The reform is aimed at achieving stability in administration. This is very important. Why? Turkish Republic, 94 years old republic, has managed to come up with 65 governments in 94 years. The average lifespan of of a government has been less than 1.5 years. Now we are looking forward to an executive president who would serve with his team, his or her team, for 5 years. Uninterrupted delivery of quality services, investments, and reforms. So that's really what that constitutional amendment is about. That reform was a critical one to address, as I said, stability in administration, fairness in representation. But now, of course, we have a much broader reform agenda. An agenda that has been actually out there since, 2012, 2013. We managed to partially deliver some of those reforms. In particular, last year, there was quite a bit of a progress. I know you'll be surprised. But last year actually was quite a good year in terms of reforms. We did not waste a crisis. Immediately after the failed coup attempt, we were able to push through a number of critical reforms. And we want to now continue. We have a window of opportunity to do more reforms. Now I have 6 minutes left, so I'm supposed to talk about Sovereign Wealth Fund. We've created Sovereign Wealth Fund simply because of 3 key reasons. One is Turkey needs to move up value chain, the first one. Turkey needs to become more competitive, it needs to move up value chain, it needs to produce knowledge and technology intensive products. The traditional financial, let's say, players tend to shy away from promising high-tech startups, at least in this country. We think that Sovereign Wealth Fund could actually plug a gap here. It could serve as like a private equity. It could serve as a venture capital. So it has a lot of flexibility. It could provide the type of support that is needed to help Turkey move up the value chain. So that was one primary kind of like factor in the backdrop. Secondly, Turkey has prioritized 3 things. It's prioritized investment in human capital, prioritized investment in infrastructure, and investment in R&D, research and development. Infrastructure has been one area where Turkey has made significant progress and quite a bit of success. And Turkey actually did deliver some sizable, very large infrastructure investments. Completed them, some of them through PPP projects, and some of them simply through fiscal resources, budget. Of course, the work is not finished. We still have a lot to do. So Sovereign Wealth Fund could also play a significant role in helping private sector or government finance some of these infrastructure investments. So that's the second factor why we have a Sovereign Wealth Fund. And finally, which in my view is probably by far the most critical component, we have numerous state-owned companies, assets. Some of them are dormant, some of them are efficient, some of them are not. The idea is, by transferring these assets to the Sovereign Wealth Fund, Sovereign Wealth Fund has the ability to restructure these companies. Yes, this is very important because through restructuring, you can actually uncover the potential. You can, yes, the focus I know right now and the speculation right now is largely about how Sovereign Wealth Fund is going to use these state-owned assets, cash flow as collateral to raise money. But that's only a small part of what Sovereign Wealth Fund is kind of supposed to be doing or meant to be doing. But the underlying, one of the underlying reasons why we have the Sovereign Wealth Fund is not just to use the existing cash flow, but actually to enhance the cash flow of companies in its portfolio. So This is why we believe that sovereign wealth fund could help if it is, run in a transparent fashion, establish the type of credibility that could actually enable the fund to even attract global money. Then I think this is a tool that could help serve, enhance Turkey's medium long-term growth prospects. So that's really the story of sovereign wealth fund. My final word on Turkey, since I'm just a keynote speaker with 10 minutes of time and supposed to sit over there. Yes, Turkey has gone through a rough period. I think probably the worst is behind us. Things are not as good as we would like it to be. But they're not as bad as is portrayed in global headlines. Our job is to continue to improve the reality on the ground. And we are committed to doing that. Thank you very much.
Ladies and gentlemen, welcome back to the stage Andrea Montanino. Andrea Montanino'yu yeniden sahneye davet ediyorum.
Thank you very much, Mr. Deputy Prime Minister. I think you said already everything I wanted to discuss about sovereign wealth fund. Transparency, you talk about private equity, you talk about venture capital. So I think you gave already a vision of what a sovereign wealth fund in Turkey will be. But I have such a distinguished speakers, and I will ask them to discuss more deeper all these issues. So let me introduce Philip Bennett. He's the first Vice President and Head of Client Services Group of the European Bank for Reconstruction and Development, the EBRD. Sarah Basubandi is a Senior Lecturer in International Political Economy at Regent's University London, who has carried out extensive research on the Persian Gulf sovereign wealth funds. Then Carol Nachle, founder and CEO of Crystal Energy, specializing in international energy markets and policy, petroleum revenue management and geopolitical analysis. And Mr. Mehmet Bostan, Chairman and CEO of the Turkish Wealth Fund, and of course is playing a major role in developing the economy in Turkey, and he played a major role in liberalization effort in Turkey. So as a bit of background, before we start our discussion, what are sovereign wealth funds? We were discussing before with Philip. I mean, there are many probably definitions of that. Usually they are state-owned funds that invest in a variety of assets and generate returns for the public use. They can be created for many different reasons and can serve many different purposes. So the focus today of this panel will be the role of the sovereign wealth funds within economy in enhancing long-term growth, the management of the funds, which are and whether there are good practices and best practices, and how they can be used to promote investments. I want to start the discussion with a question for all of you, just to set the stage. Sovereign wealth fund is not a new thing. I mean, they existed for at least 150 years. But it's true that in the last years, we have seen a sort of a sharp growth in sovereign wealth fund. 11 out of 20 largest funds in the world were created since year 2000, so in the last 20 years. So my question for you is how you see the prominence and role of sovereign wealth funds evolving over the next 20 years. Maybe we can start from a lady. Sarah?
Yes, as you mentioned, sovereign wealth funds are not a new phenomenon, but the reason that they found their ways to the international stage and to the international attention was because very quick and very significant growth of their size of their assets. And that highlighted a shift in movement of capital around the world. Previously, it was the developed world who was providing capital and investment for the developing countries, and suddenly, especially because of the rise of commodities and the rise of emerging markets, that trend has completely shifted. So that created a whole new era in the global finance and for the global capital. From here onwards, how I personally see the future of these funds is that, of course, in terms of specifically the area that I focus, which is the commodity sovereign wealth funds, I see a quite significant slowdown in their activities because the investments are, as a result of the slowing down of the prices of commodities, especially oil for oil exporting countries, is declining, and since the revenue is declining, therefore there would be less available revenue to invest in these sovereign wealth funds. They also have shifted quite massively in terms of their interest. Those funds who traditionally were mainly interested in more secured investments in dollar or in European continent and in European assets now are becoming much more courageous and much more risk-taking, and they're shifting their assets towards emerging markets and territories that they were previously not really on their investment universe. So these are the two key points that I think we would be seeing in the near future.
Thank you, sir. Mehmet, what's your view of not just the future of your fund, but the future of sovereign wealth fund in the next 20 years?
Teşekkür ederim soru için.
Thank you for the question. Mr. Minister, distinguished guests, of course, I am the representative of the youngest such fund in the world, obviously, because it was just being created. $200 million is what we're talking about. Mr. Minister explained very well why it was founded, it was created. But in the coming era, what the country's assets, funds, what they are expected to do, I want to share my opinions with you. Especially the fluctuations in commodity prices in the world recently, because they were going down, those prices, forced the funds to sort of diversify their assets. There isn't really one definition for such funds, wealth funds. If we had called it any fund, not a country's fund, but probably people wouldn't think much of it. Because like in many other countries, we don't have a surplus in our exports, and we don't have really oil income or gas income either. Countries have a need to optimize their assets, and they need to use their possibilities for long-term investments. So they need the diversification. That is what makes, I think, into the future, that is what will make countries' asset funds, wealth funds, more important as days go by. The restructuring of these assets, making them available for use in the world of economy, increasing the capital accumulation, savings, increasing the savings, will be areas where we shall be hopefully beneficial as the wealth fund of Turkey. And in this order, there are certain needs that Turkey has, and our targets will include those also. Personally, I feel that wealth funds will be in many markets of the world, especially in capital markets, will become more and more important. $7.5 trillion is the size of it in the world, and pretty soon it will be probably double-folded. That's the expectation. And Turkey did not remain outside that development, and we have already established our own fund. Thank you.
Thank you very much, Mehmet. Carol, what's your thinking?
You know, we're not into more than 5 minutes in the discussion. There is one fact that clearly emerges, that we don't have a single definition of what a sovereign wealth fund actually is. But for the sake of the argument, let me tell you how I see it, because that's what I'm going to build my contribution on. So first of all, we have the word sovereign, so it has to be state-owned. You have wealth, so it has to be generated by windfalls, in this case from the commodity like oil and gas, or that creates accumulation of sustainable accumulation of foreign exchange reserves. And the key point in this definition is the word fund, which is an investment vehicle that invests in the long term to create long-term income, and does not have a specific long-term liability, unlike, for example, pension funds. So we have sovereign wealth fund, is a state-owned, lives on windfalls, and does not have a specific liability. And sovereign wealth fund cannot be seen in isolation. It has to be part of a wider fiscal package where you have three important components of the system: a fiscal rule that ties expenditures to revenues, a liquidity buffer to stabilize the economy when you have changes in the oil price, for instance, and this is the norm in the oil and gas sector, and again, a ring fence, I insist on the term ring fence, saving function to create long-term value and a positive expectations of future income. So if we put all these together, we can see that we're not surprised to see that actually sovereign wealth fund will be important for the economic growth of a country, because they create stability of the budget, protection of the savings, creation of positive expectations of future income. All these are important for economic growth. But at the end, because they are state-owned, who can tell governments what to do? So what we see usually, especially in the developing world, we see that we have incomplete system. So one of the three components I just mentioned, the fiscal rule, the saving, the liquidity buffer, one of those would be missing, and this is what we find. And we also find that the systems tend to be highly politicized. So to go back to your question about where I see the future trend with sovereign wealth fund, I think the question answers itself, because I would simply say short-sighted governments are going to deplete their capital, and just like old, frail, small ships, sovereign wealth funds are going to sink accordingly, and wiser governments are going to invest their capital wisely for the long term, so that they create more income from dividends, interest, appreciation of their assets than what they are earning in the short term from the sales of oil and gas exports. However, I would like to conclude my opening remarks by saying that even the wisest and most prudent savings and investment policies are going to have limited impact if they are not accompanied by a taming of the expenditures and a diversification of the economy.
Thank you very much. Philip.
You ask about the prospects for sovereign wealth funds. Let me address it slightly differently. For EBRD and the EBRD region of 36 countries, sovereign wealth funds have become increasingly significant, and we would anticipate that will continue, that trend will continue. There are currently 9 sovereign wealth funds resident in our countries of operation, the 36 countries where we invest. And we are increasingly dealing with them as the international scrutiny has created more transparency, has created more focus on the corporate governance. So it's allowed us to take them on as partners when in the past, some of them we might not have been able to do, or that we might not have been able to work with. But as we move forward, we view sovereign wealth funds as very complementary to the objectives that EBRD has. First of all, sovereign wealth funds in many ways are key agents, key actors in extending long-term capital of one type or another into the markets, whether they're based inside the market or bringing capital from outside the market to bear. And so long-term capital is key, and from our point of view, in our region, capital market development is key, and sovereign wealth funds have the ability to to play both in direct investment, but also to help facilitate capital market development, and we're already seeing that. Now, we interface with sovereign wealth funds in a multitude of ways. In fact, last night I could count 6 different ways. Some of them are interesting ways and some of them aren't. But as I look at sovereign wealth funds in our region, I think about ones that are somewhat like TWF. I think about Samruk Kazyna, the Strategic Asset Management Sovereign Wealth Fund of Kazakhstan. Kazakhstan, Russia, Azerbaijan are the predominant countries with sovereign wealth funds, but there are more, as I said, 9. But Samruk Kazyna, I think, has some lessons for TWF, and maybe we can talk about that later. But also, RDIF has lessons for TWF, and I note with interest that TWF has already signed a MOU with RDIF, and we have worked very closely over the years with RDIF in strategic investments inside Russia. So to us, sovereign wealth funds are complementary and actually will facilitate our long-term co-financing strategy in our countries, and I can come back with some examples.
Yeah, given that you already introduced the issue of how the EBRD deals with sovereign wealth fund, I think this is important. It's also important, I think, for the future work of the Turkish wealth fund. What are the prerequisites that you have in order to make co-investment, co-finance, joint deal with sovereign wealth funds around the world?
Well, as you would expect from an IFI, we have a very developed context for consideration of sovereign wealth funds. You know that EBRD has a private sector mandate to facilitate private sector development, entrepreneurial activity, capital market development. So you might say, well, then why are you working with sovereign-sponsored sovereign entities? And the answer is that they bring something that is not available in the private market in many of our countries. But how do we judge them, first and foremost? We judge them through suitability criteria that are quite extensive, and I think TWF is aware of these kinds of considerations, but we look at the purpose and the objective. The legal foundation is one category, governance and professionalism, financial transparency, legal behavior, government influence, and integrity and sanctions. And we are always looking for the potential for a sovereign wealth fund to be subject to political interference or adverse investment behavior that may be in conflict with the management and the mandate of an IFI like EBRD. So we need to be careful that we don't partner up with entities that we're not comfortable with, and we need to be sure that they have a similar idea of mobilizing capital, enhancing competitiveness, and driving long-term growth.
Philip, you introduced a word that I like very much, which is transparency. And I have a question for Sarah on that. So you made extensive research on Persian Gulf sovereign wealth funds. And these funds, not just the Persian Gulf, but funds in general, vary in terms of transparency of their operations, the amount of care taken to address ethical concerns, for instance. We always have in mind the example of the Norwegian pension funds or sovereign wealth funds, which is a champion of these things. So what is, according to you, the role and importance of transparency and ethical considerations in managing sovereign wealth funds?
Transparency and ethical guideline for managing a fund which is sponsored and organized and handled by a government would have, thank you, would have quite a number of outcomes. One is, of course, to protect the reputation of the funds. And especially in the case of the GCC funds, I think reputation has been an important part of the activities of the sovereign wealth funds, simply because most of these estates are relatively new in the structure of global finance, and they have made a conscious effort to establish themselves as wealthy nations, as leading powers in the world of sovereign wealth funds and in the world of government financing. The second important point is when you have a stronger guideline for operation, when you have more transparency, that requires those who are involved in the day-to-day activities and handling these assets to focus more on their core mandate, which is to maximize the return of these assets. So transparency encourages and boosts the commercial return aspect of these funds. The third question is, of course, when there are a lot of assets involved, one needs to be careful about how to handle these assets to avoid any potential fraudulent activities or evaporation of funds. There has been few incidents about the GCC sovereign wealth funds, but in comparison with, for example, my home country, Iran, the number of incidents, the fraudulent activities and the evaporation of assets in the case of the GCCs have been nowhere near some of those bad examples of handling and managing sovereign wealth funds. And finally, I think, especially in the case of the GCCs, when you're talking about a society in which the social contract is based on the government playing an instrumental role in the society in terms of distributing the assets across the society, having transparency is quite important in order to manage citizens' expectations. The citizens, of course, have always, in these countries, have always looked up to their governments because unlike some of the developed world examples where the people are paying tax and the government is responsible to deliver those services, here the government is paying people and the government is the sole owner of the assets, and as and when they feel extremely generous, they will distribute these assets in the shape and form that they see fit. So transparency has been probably consciously kept a little bit lower in these countries because the government felt the need of being able in controlling the citizens' expectations from the way the government distributes these assets.
Thank you.
Mehmet, we said, of course, there is no one model of sovereign wealth funds. So I'm really curious to understand the model of the Turkish wealth fund. What is the pipeline you are imagining to invest? How you will invest? Majority stakes, minority stakes, only in Turkey, abroad? Which are the criteria to define the asset allocation and for building the portfolio? Can you give us more details on how your sovereign wealth fund is structured, and in a way whether also if you inspire to some examples around the world? I assume, I mean, the government look around and see different models. So whether you had a model and also how you plan to operate in practice.
Öncelikle söylemem gereken
Well, first of all, I need to say that we have been transferred different types of assets, different classifications of assets. So we need to really analyze and work on these different assets very well. And we are also currently working on how the wealth fund, the sovereign wealth fund, will function in Turkey, how we are going to communicate with the assets, and how we are going to do targeting. What kind of KPIs are we going to establish, for instance? We're still working on this. This is a work in progress, and we have a work plan of 10 years. So in the initial years, first couple of 2 or 3 years, the Sovereign Wealth Fund of Turkey will actually identify its organization. We're still working on this. We are still trying to see how we are going to shape governance. Governance is top priority for us. And in the coming process, for every asset, we're going to have a diagnosis process. We're, again, currently working on this. Some of the assets have had not been evaluated, so we have done the evaluation. And of course, audits and financial standings, we're taking a picture, so to speak, of their current situation, and we're trying to see how we can create a good synergy with all these assets, what kind of a new value we can create. So this is also another thing that we're going to work on, that we're going to focus on. Of course, different assets are coming from different sectors. So we will also have to take into sector-specific trends, and mergers and acquisition potential in Turkey and outside Turkey are also important things for us. But as I have said, we are going to work on the design of the management company, the wealth fund itself, and then we will identify the areas for progress. And in the third stage, we will look into new areas of investment and new opportunities. And here, as I have said, our number one priority is the priorities of the country. We will focus on the priorities of our country. Then we will try to tap into the cooperation opportunities with the private sector. And I also would like to specifically share this with you, as we have different stakeholders here. Competition dynamics. We will have an attitude that will actually support this. We are by no means going to use the authority given to us by law to interfere in the functioning of the market. So transparency and accountability are going to be the most important criteria for us. So together with private sector, together with the private investments, be it domestic or international, we're going to explore all opportunities for Turkey and for the other parties that we're going to cooperate with. So in summary, I can say that our business plan or our work plan is to first identify and establish the main structure of the sovereign wealth fund in Turkey and governance. By the way, we have made great progress on this. The second thing is the assets that are transferred to our fund. Important brands of Turkey, like Turkish Airlines, for instance, a part of Turkish Telecom, or the postal services, PTT. Very important companies have been handed over to the fund, and important banks also. So we need to assess them just like a holding from an investment perspective, and we need to create a synergy out of all these things. It's very important because at the end of the day, we're talking about a balance sheet of 200 billion lira, TL, dollars, and this also brings an advantage on the scale. So in different markets, especially in capital markets, domestically and internationally, we consider, or we are thinking of making use of it in a very positive way, both for the investors and for Turkey. And work is still ongoing in this field as well. And hopefully, as we complete these plans, we will be announcing them to the public. One final remark: as the Turkish Sovereign Wealth Fund, we attach maximum importance to transparency. We're going to adhere to the principle of transparency. And as you know, we have a set of principles, Santiago principles, adopted by all wealth funds in the world, and we also declared that we would adopt them, and we have done so. So this is going to be embedded, and this has been embedded in our strategic document as well.
Just a follow-up question. Two. The first, whether you can confirm that you will look also at investment abroad at a certain stage. And the second one, given the asset that has been allocated to the fund, as you mentioned, the companies, you will have, or do you have also a role in the privatization process in case these assets, I mean, in terms of increasing efficiency and therefore maybe going to the market? So you will play a role on also on this, on privatization.
Well, here, about privatization, currently there is a state institute. The privatization presidency is already there in the Turkish government. The reason why the assets were allocated to us was not for sales or privatization. No, we are just like any other investor. Different assets selling or buying different assets, yes, we can work on it, but we don't have such a decision because our number one priority is not this. Our number one priority is to first reveal the real value or potential value of these assets. But of course, just like all institutions that manage funds in the world, we will have a dynamic portfolio. We can, of course, sell assets or buy assets, but currently it's not on our agenda. We really need to work on this in detail. Currently, we are not at that stage yet. It's going to take some time until we reach that stage.
Thank you very much. Just because we are talking about the Turkish Wealth Fund, Philip, what you would recommend to the newborn Turkish Wealth Fund in order to be successful?
Well, Mehmet said several interesting things. We are looking forward to working with the Turkish Wealth Fund in a variety of areas where we think we can generate value together. I recognize what Mehmet said about not focused on privatization, but they own strategic assets, many of which might be suitable for privatization. And in fact, we are the owner, a part owner of one of the 14 corporate assets that have been put into the fund, and that is Borsa Istanbul. Now, we are in Borsa Istanbul as a 10% shareholder entirely to facilitate the eventual IPO of Borsa Istanbul. And so we are working on enhancing the corporate governance, enhancing the structure, the management, developing a strategy. All of those things will take time. All of those lead to an eventual goal, and this is something that we are working together with TWF because they have the same goal, which is to create, as Mehmet Simsek said, to create new value, new competitive value in these state-owned assets. So Borsa Istanbul is very important to us. We believe that as we work together, that this asset will be revealed as very valuable to the private market and that it will be subject to eventual privatization. But let me make an example again. I mentioned Samruk Kazyna of Kazakhstan. We currently have 11 outstanding investments with Samruk Kazyna. They own 35% of the GDP of Kazakhstan. Every one of our facilities is pre-privatization in one way or another to enhance the competitiveness of the companies that Samruk Kazyna owns in order to make it possible to sell it to a strategic buyer or to sell it to the public market. So we believe that's the kind of cooperation we can have with TWF, and we believe we could also have cooperation in investing in new assets, as we did with RDIF, with 5 significant co-investments next to RDIF over the last 7 or 8 years. So those are significant areas of opportunity. I should say we also hope that to interface with TWF on capital market development here in Turkey. The capital markets here are one of the vulnerabilities of the Turkish economy. It's a very large, significant economy with a very weak ability to marshal long-term capital. We are very focused on trying to change that. We believe TWF could have a role in providing long-term capital to this market. And one final thing, we mobilize SWF capital for our equity business. We have an equity participation fund, which we have just first close. We have SAFE of China, SOFAZ of Azerbaijan. We have a Middle Eastern Sovereign Wealth Fund who has now committed for the second close. And so we anticipate, here is another way that sovereign wealth funds can participate in EBRD's equity business in our region. And though Mehmet doesn't know it yet, I will be marketing the Equity Participation Fund to him as well to perhaps participate outside of Turkey as well as inside Turkey. Our participation fund already owns Turkish equity, but it owns equity in other parts of our region too. And long-term capital from TWF could actually fit very nicely in the longer term with what we're doing.
Thank you. We're running out of time, so I just invite you, if you have any questions, just to raise your hands. But I want to go a little bit beyond Turkey now with Carol, and talk about what's the role of sovereign wealth fund in supporting long-term investment in energy. I mean, energy and sovereign wealth fund are linked. I mean, 56%
funds for sovereign wealth funds comes from oil revenues. So clearly, there is first of all an impact on these revenues due to the lower oil price. And my first question is how this will affect, say, revenues for the funds. But then the second question to you is what role you envisage in the sectors, particularly in the energy sector, for sovereign wealth funds?
Yeah, I think investing in energy is exactly what sovereign wealth funds should not be doing. And investing in domestic energy is exactly what they should never be doing, because actually why you're setting up a sovereign wealth fund? You're setting up a sovereign wealth fund for two main reasons. First of all, to protect the economy from fluctuations in oil prices. So if you go and you put your money in the energy sector or oil-related investment, what are you doing? You're just still exposing yourself to the same risk, right? And second, the second objective of sovereign wealth fund is to protect the local economy from this massive influx of foreign commodity into foreign exchange commodity to your economy. So if you allow that, you're going to have an appreciation or heating up of your economy. So instead, sovereign wealth fund should be investing in non-oil related sector and in foreign assets, because that's how you end up really achieving the objectives of protecting the economy from fluctuations in the oil price, and also diversifying the economy and creating sustainable income for the long term. Now, in terms of the impact of the oil price on the sovereign wealth fund performance, here I would say it depends on the design, but we have to distinguish between two important functions or two types of sovereign wealth funds. At least I'm talking about petroleum funds here. So you have the savings funds and you have the stabilization funds. Let me start with the stabilization funds. Their function, as their name indicates, is to stabilize the budget. So you don't have this kind of pro-cyclicality in terms of expenditures. When the oil price increases, government increases spending. When the oil price decreases, the government cuts significantly on its spending. And that's why they invest in liquid assets. So that's why we call them usually sovereign liquidity funds. But there are the other funds, which are the saving funds. These funds invest in long-term assets, rather illiquid. It's a different portfolio than the stabilization fund. For these ones, they should be, in principle, better shielded from fluctuations in oil price, because the savings there and the withdrawals should not be dependent on the oil price. But because, in practice, very few countries distinguish between stabilization and savings, what we see is that big saving funds, they still hold some liquid assets which they keep as a buffer in case the government needs the money when the oil price goes down, and as a result they end up selling their assets, I would say, not at the same profit if they had held them for the long term. And just to give you an example about the direct impact of oil price on funds that function as stabilization, think of Russia. Just to give you the number, I wrote it down. The Russia's reserve fund in 2008, it reached a peak value of $142 billion. Fast forward 8 years later, 2016, less than $33 billion. You mentioned, Kazakhstan, $62 billion, and if the existing pattern of spending continues, experts predict it to be depleted by 2022. So the key is to have stabilization, liquid fund, buffer for liquidity, and a saving fund which is well ring-fenced to stop the government from tapping into its assets, either because of incompetence or ill intent.
Thank you very much. I don't know whether there is any question from the audience. Please. Yeah.
Thank you. My question is for Ms. Nakle. You had mentioned that many of the GCC sovereign wealth funds are changing their risk profile. They're moving into more risky assets. I was wondering if you could elaborate a little bit more on that in terms of whether you have any sense of what kinds of assets qualitatively, quantitatively, what kinds of flows might one be expecting towards these riskier assets? And I guess the second part of that question is from a Turkey-specific point of view, what kind of profile of assets might Turkey offer that might be of interest to the sovereign wealth funds that you follow? Thank you.
Shall I take it? Okay. Well, in terms of the current acquisition of accumulation of assets, not just for the GCC countries, but we noticed a global trend among sovereign wealth funds that they are putting a greater emphasis on savings. And when you think about it, savings means you have this long-term horizon and you're investing outside the energy sector in foreign assets. So you can go for real estate. So we're seeing a lot of accumulation of assets in illiquid assets such as real estate. In terms of Turkey, I think I will have to leave it to my Turkish colleague to answer, but I would add to that, for the GCC, there is one interesting aspect. If you think about it today and this direction towards promoting savings, I think because they are coming to terms that because of the existential threat of climate change, they are realizing that unless they transform that assets below the ground into a more sustainable income generating financial portfolio, then the reserves in the ground are going to be meaningless irrespective of their size. And that's why they're moving towards those long-term illiquid assets. And they can afford a higher degree of risk-taking than, let's say, if you have more specific liabilities such as pension funds.
Well, I missed the question. I couldn't hear the question. Can you ask the question again, or can you repeat the question to me?
My question was the profile of assets that Turkey might offer in the context of this switch that these kinds of GCC sovereign wealth funds are moving towards a different profile of assets. I was actually curious as to whether the kind of assets that Turkey has to offer would be of interest to the GCC sovereign wealth funds that are making this shift. So perhaps the question can be taken by both of you, one from each side. So.
Well, I couldn't quite understand. Mr. Minister, did you understand the question? Well, I can say, based on your answer, maybe I'll say something. As the Turkish Sovereign Wealth Fund, what kind of contribution can we make to the savings? If you're asking that, how we are going to contribute to savings, then I can answer as following. As a Turkish Sovereign Wealth Fund, we are currently talking about $200 billion, which is a large scale. This is an incredible amount of assets that we could offer to the capital markets. We need to structure these assets both at local and international level. We want to present these to the investors. So this is how we can contribute to savings. Well, the Turkey's savings percentages are very low, lower than expectations, lower than 13-14% of the GDP. So we want to bring in more investors to Turkey to create a market that we could offer for the assets or wealth fund, and we want to make sure that savings are there and competition will be higher with lower volatility. So we want to guide people towards such assets. This is one of our aims.
You have 30 seconds because we have to move on.
Let me just answer that, your first part of your question, quickly in a different way. EBRD is proof positive that sovereign wealth funds globally are looking at riskier assets in a different way. The very fact that we can set up an equity participation fund where the sovereign wealth funds will get 20% of our return on our equity portfolio across 36 countries, which are not the normal countries most of these people are used to investing in. So they're taking a risk, but it's a diversified, high-quality risk of the EBRD equity portfolio in a region that includes Moldova and Belarus and Tajikistan. And none of these sovereign wealth funds have looked at this way in the past. Now, to connect to Turkey, if Borsa Istanbul is privatized at the size that we expect it will be, that will qualify for our equity participation fund. So Middle Eastern and Asian sovereign wealth funds will have a chance to own the Turkish stock exchange. How's that?
Thank you. So the next session begins in 30 seconds. We have two parallel sessions. One is completing Europe, connecting the three Cs next door in Fuji 2. And another session is the Southern Gas Corridor located in Geneva.
So join me, please, in thanking our panelists, Mehmet, Sarah, Carol, and Philip. Thank you.
Thanks very much.